Hello everyone, welcome to Car Conversations episode 10 with your host Kurt here. Today we're going to be looking at company 401k plans and also the voluntary group life and health insurance that typically comes with working for a company. So starting off, I just want to say that company 401k and group benefits are almost always the best option in terms of value because what they're actually doing on the financial side of things is working on bulk terms. So the advisor or the insurance agent is getting a large amount of people insured or put in the stock market at the same time, which allows them to bring down prices for you. So it should be noted before I get any further that your company might not have voluntary group insurance, and it might also have something other than a 401k plan, depending on the size of the company or whether it's public or private sector. So when we're looking at the public sector, it could be called a 403b. It's basically the same thing as a 401k. And then on the smaller company side of things, it could be called a simple IRA or a SEP plan. So those SEP plans and simple IRAs are more specific and work more like a regular IRA or Roth IRA, but they are still connected with the company in small ways. So we're going to stay focused on the 401ks and voluntary group benefits and the companies that provide those options for you. So on the 401k side of things, a lot of companies like to provide a match. It's always important to take advantage of that match because it's essentially free money that the company is giving you for putting money into a retirement account, which is awesome. And a 401k sometimes has misconceptions of what you can actually do with them, that you can essentially put in the same mutual funds as you can for an IRA or a Roth IRA because the 401k and the tax workings of it are essentially like a shell. And it's the same for a Roth and an IRA, 401k, and a Roth 401k. So they just have different tax consequences, but they are essentially the same thing because you can put the same investments in them. You can get the same return. They just have the different tax consequences at the end of the day. And as we all know, on the Roth individual side of things or the Roth 401k, that money is taxed up front and it won't be taxed in retirement. So the main difference between a 401k plan and an individual IRA or a Roth IRA is that the company 401k is likely going to have lower running expenses. So this goes back to the bulk situation. If we're getting a bunch of people invested at the same time, the advisor can lower his prices and the other administrators can also lower their prices. So you get typically, like I mentioned before, an advisor will be charging somewhere around 1%. That will go significantly down when you are investing in a 401k. Another thing to note is that the 401k is going to have some limited investment options. They likely won't change the plan just for you specifically. You have to go with the options that they have provided, and those are typically narrowed down pretty precisely, and they are good options. A lot of people will go with a target date fund, which slowly updates itself as you get older, and it'll get more conservative as time goes on. It's a very popular option. It's a very hands-off option, and a lot of people like to go for that one for that reason. Moving on to voluntary group benefit insurance. So we're going to be looking at the supplemental health, disability, and life insurance that typically comes with that benefit. And you don't have to get all of them. They're usually separated out so you can get different ones depending on your needs. But first off, the supplemental life insurance is an excellent add-on for the life insurance you already have. It typically has a payout for you when something happens, and it varies on the company and the amount that you're paying in. But I don't know if it's always necessary because it is an add-on. It has some great benefits, but in the end, it might just be another cost that comes out of your paycheck. Some people like it, especially if they have families, but it's just important to note that it is another expense that might not always be worth the extra money you're paying in. Same with the disability, same situation. If it's worth what you think is the risk that you have of ending up on disability or needing disability, then it might be a great option for you. On the life insurance side of things, this group life insurance is an excellent option because on the individual side, life insurance in general is pretty cheap, but on the group side, it's even cheaper. So it's a nice add-on to get the life insurance, even if you maybe even have some individual life insurance on there already. It's just so cheap on the group side of things because you are getting it in bulk and the agent is selling a lot all at once. It makes it a lot cheaper for the insurance company to provide it at a lower cost. So before I sign off, I just want to touch on a couple things here. So everything on the benefit side for a company depends on your specific situation. Sometimes you might need things, sometimes you might not, and that might also change as you go through life and whether or not you have a family. On the 401k side of things, it's always an awesome option to have a match with your company and always take advantage of that. But one drawback of some company 401k plans is vesting. Vesting is how much ownership you have in your 401k, and sometimes that takes a few years to get 100% vested because a company wants you to stick with them and not join them for a few years and then run away with the match that they provided for you. Some companies right away will provide 100% vesting, so if you decide to leave, you can take the whole 401k with you. It's just important to know what your company is providing and to know if you are 100% vested right away or how long it takes to become 100% vested. So if you have any more questions on company benefits and 401ks, please comment down below. This is Kurt signing off on Car Conversations episode 10.